Hi everyone, welcome back. Hope you guys are having a great day. So this is a clip from a previously recorded video. This is a much shorter clip of it. But as always, not financial advice, for entertainment only. Do your own research. And I'm invested in closing companies. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's get into the clip. Riot announced Bitcoin produced 460. Average Bitcoin per day was 15.3. Bitcoin held was 7,250. Bitcoin sold was 400. Their deployed hash rate was 10.7. That increased a little bit here from the month of May, about 200 petahash or so. And then down here, there was something else. Here it is. You can read over some of this stuff here. But the interesting part was Riot's power strategy, how it works. They have two sections on this. Riot's dynamic power strategy explained. Definitely worth a read to understand how that is all being taken into account for their production and everything else. Okay, I'm just going to go over the top one here. So in 2020, June last month, Texas experienced extreme heat, causing demand for electricity to spike, in some cases extremely close to available supply. That's never good, right? So on certain dates of peak demand, Riot curtailed more than 90% of its power usage, temporarily foregoing revenue from its Bitcoin mining operations and instead providing energy resources to ERCOT. During these times, the company's curtailment of operations meaningfully contributed to reducing overall power demand to ensure that consumers did not experience interruptions in service. So that is good. That's kind of the wonderful thing with the Bitcoin miners is they can power down relatively quickly, provide power back into the grid when needed. But there is a trade-off on that, right? You're mining less, but then you're supposed to get, whether it's credits or actually revenue from the power that you curtailed on. And they do explain it here a little bit. I'm not going to go too deep in the woods. Jason Les has explained this in plenty of interviews that he's done on how this works and everything else. But Riot actively participates in several demand response programs, including ERCOT's ancillary services for coincident peak 4CP program. So during the month, I think it's June, July, August, and September are those months where if they curtail during those times, I believe the way it works is they won't pay a higher fee next year. Okay, so it's a juggling act, and it's understandable why they're doing it. Okay, but definitely read this if you haven't heard Jason Les speak about this in the past. All right, let's take a look at their numbers here. And we got one more to go. I'm trying to get through this. Okay. So Riot has 175 million shares outstanding. Market cap is at 2.3 million. There's the second biggest one right now after Marathon. As far as their last 12 weeks performance here, you can see it's been okay. They're down 12.3% from 12 weeks ago. They're up 11.4% from 8 weeks ago, up 14.4% from 4 weeks ago, and last week they were up just 1.9%. BTC HODL is 7,250. That's valued at 222 million. They sold, like I said, 400 in June. BTC, you can see that they peaked in January with 740 Bitcoin, and after that, it's been kind of flat here in the 600 range. In June, obviously, a lot of curtailment has happened for them. They're down to 460. This would, I think, put them below CleanSpark right now in production. But they do generate revenue from it here, and I think they provided that in here. I think I might have power sales, 8.4 million. Demand was 1.6 million as well. So I may have to do some numbers on this to see, had they run for the full month, would that be better than the numbers that they got here? I'll have to do some math on that when I have a little time. Okay, so we've covered that. BTC HODL has been increasing here pretty much monthly, it looks like. I don't think we have any dips here. They're consistently stacking their deck with Bitcoin HODL. BTCX hash efficiency, they're pretty much in the 60s. Now they're in the 42s in June. So definitely a lot of curtailment there. Like I said, BTC sold. They're kind of up and down on it. They sold the most in January, 714, followed by March, 681. And then they've been close to 600 for April and May, and they're down to 400 in June here. And hash rate. So hash rate growth has been great last year through the second half. The first quarter, basically of the year, they were a little bit flat here, up a little bit towards the end of it. And then they've been flat ever since then. They increased a little bit here in June as well. Okay. Now, as far as the revenue is concerned here, you can see the revenue was up and down, but it did start to increase and go to the upside ever since December of last year into January, February, March, April, and May. May was their best month of 18.59 million. Now we're back down to 12.7 million, which was a big drop for them. But they did get the credits and the revenue from the curtailment on it. You can see the hash rate difference here. Bitcoin sold value as well. You can see that. Last 4 quarters revenue, we've covered that before as well. You guys can take a look at that later on. Institutions. Institutions did increase to 336 from 333. 74.1 million. So that's actually down from the 74.14 million that they had in May when I recorded this. And that's down to 41.62% from the 41.63. We still have 3 buy ratings, or 3 strong buy ratings, 6 buy ratings, 0 holds down, so that's gone. So now we have 9 analysts instead of 10 analysts covering them. And the price targets stayed the same at $60 for the high. The average increased to 12.46 and the low at 780 right now. Okay, as far as what miners got installed and how much they were operating for, they were operating for about 19 days, it looks like, on average, with the miners here being installed, the 140 terahash XPs being installed and running for about 6.25 days, roughly. You can run the numbers either way. You could increase those, decrease that one, or increase this one and decrease those. That's kind of where I figured it out, possibly around 19 days. So that's kind of an estimate there. That got us to the 12.77 million in revenue that they had for the month. We can see here based on the network or the average Bitcoin price in June, and that's what we have here. So that's kind of what we're looking at. And based on that, their current quarter, we're looking at about 49.8 million in revenue. Last 3 quarters was about 100.8 million. Combined total 150 million, 50% net income. We're looking at, with a P of 20 at $8.60 to a P of 20 for 75% net income at $12.91. Sorry. Currently, they're at $13.54. I think they're a little bit overvalued right now. But given that they are going to be increasing to 20 some exahash, and them being one of the favorites here as far as the miners are concerned with investors, they could definitely get a heck of a lot more PE going forward, especially if Bitcoin goes up in value. So they could be, they're saying $16 for the high end, $7.80. Yeah, so looking at like a PE of 25 right now for them on the current numbers. Okay, so a little bit overvalued, maybe fairly valued right now. But with the growth that they do have, I think they'll do fine. They've done a great job last time around. We were in the bull run. I expect them to do the same thing this time around, along with Marathon and some of the other ones as well. But we'll see. Okay, so overall, not bad. The production is going to be up and down right now through the summer months for them. It's going to be actually possibly down from where they were because of the curtailment. So that's expected. Investors kind of know this, or at least they should know this going forward. And things usually start to pick up back in after like September, October, November, December areas. When we get into those months, those are cooler months. Those usually help ramp up the production during those months as well. Okay, let me know what you guys think of that one.